Welcome everyone. Let's talk money and let's figure out how the big business news is impacting your wallet. This week's headline news which we need to decipher. Reserve Bank of India or RBI has kept the key bank rates unchanged. What does this mean for your pocket, your savings, your spends? Also, inflation estimates have been raised again by the RBI. Retail inflation has risen when oil and fuel prices have come down globally. My guests today, let me introduce you to them. Shugato Bhattacharya, Senior VP Business and Economic Research at Axis Bank. Also with me, Gokul Choudhri, Leader Direct Tax BMR Associates LLP. In the last monetary policy review before the end of the financial year 2015-16, the RBI governor has decided to keep the bank rates unchanged. The status quo came after RBI chief slashed the interest rates by 125 basis points or 1.25% in the last year and a half. This means two things. What you earn on your bank deposits should hold. Current bank FD rates for a one-year deposit hovers around 8%. This also means that your loans will not get cheaper. So home loans, which barely slipped below 10% towards the end of last year, stay there. So currently, if you could strike a deal around 9.5% on your home loan, that's a good one. Shugato, let's first explain to our viewers why the governor decided to hold bank rates this time around. Because you hear the clamor from the corporates, from the economic stakeholders that the rates should be brought down.
Sure. I think I can't do any worse than quote Governor Rajan's example of dosa economics.
Okay.
So, I mean, you remember that speech in just a couple of days back where he talked about the price of the dosa comes in, given your incomes, I mean, you actually are worse off.
Yes.
So I think what Governor must have felt, and to a certain extent I agree with him this time, because the key elephant in the room is now the payments that will be the government will have to commit for the 7th pay commission. So that will be a significant increase in demand. Of course, it will not be as bad as happened in the 6th pay commission in 2009, if you remember, when things just went out of control. It's not going to be as bad, but they still do not know. There's that uncertainty on how the pension that will be coming in from the OROP scheme that comes in, the salaries. And remember, this is not just the center. After that will come the states. After that will come the public sector enterprises, a whole bunch of things. So, I mean, people are worried. The governor is especially worried that, I mean, of course, I mean, they have been helped with the fall in oil prices from 125 to a dollar to about 30 to a dollar. So that has helped. But he is still worried that inflation, price increases in healthcare, in education, in transport services, nothing has come down. I mean, it remains pretty much the same. House renting prices, everything remains the same. So he is afraid that, I mean, if he lets go at this point in time, that there might be a sudden upsurge in these. I mean, they have the government of India, the Reserve Bank, together they have fought a battle to get inflation down from 10, 12% down to 5, 6%, and they want to keep it that way.
Okay, so you know, inflation projections, just to set the stage here, have been raised to about 5% for the year ending March 2017, higher than 4.8% estimated in December. So it's just a very, very marginal increase. My question to you is that, you know, if I look at how oil and fuel prices have come down, and the chart is extremely interesting on that, Shugato. I'm looking at the oil price comparisons, the global crude prices. If you look at what happened in February 2010, they were at $83 to a barrel. They peaked in February 2012 at $110 to a barrel. After that, they've been coming down, inching down. In February 2016, they're at $30 to a barrel. Now, if I take fuel prices, we're taking the national capital as a standard, you know, mirroring what's happening across the country. They just differ state by state a little bit. February 2010, we were at 47 rupees to a litre, pardon me. That was the price. We went up to about 73 rupees to a litre in February 2014. And we've only come down to 60 rupees to a litre. So I think the big question, Shugato, every common man has is that, look, oil and fuel prices have come down dramatically, but it's really not helping my wallet. My prices and the price that I pay for fuel hasn't really helped me at all. Why?
I'm sympathetic to this view that, I mean, why if oil prices are coming down, why am I not seeing that same thing at the pumps? But there are a couple of things that we need to worry. When oil came down from 125 to 30, as you pointed out, at that same time, the rupee would have gone down, would have fallen against the dollar rupee rate from about 55 to the dollar down to about 68 or 60, 67, 68 to the dollar. So that has actually, because I mean we import oil in dollars, and when it lands into India, it gets translated into rupees. So I mean the huge fall, about a third, is immediately wiped out by the drop in the currency. Number one. Okay. Secondly, I mean the government, as you know, as your readers, as your listeners know, I mean the government has also imposed, every time the prices have been brought down, there have been excise tax increases on the conversion of crude into petrol and diesel. Now, I mean, this is from a public good standpoint. I mean, you need to consider the interest. Right. I think there is a case for this, because remember that at whatever, I mean, the case for Delhi is the same in Mumbai, the same in the bigger cities. There's been a huge increase in the import and consumption of petrol, diesel over the past 1 year. 25%, 30% increase year on year every month in the consumption of petrol and diesel. As a country, we really can't afford that. I mean, what I would have liked was for this excise tax to be ring-fenced into a specific fund, into a dedicated fund, and that fund would have been used to provide urban mass transit systems, urban metros, bus transport as something which hasn't happened. And that's something that I worry about. Okay. I think this is a golden opportunity to improve urban transit systems, and I think the government should take steps to move in that direction.
All right. So that's the big oil question. We also heard the finance minister saying that the government has benefited from oil prices coming down, and at least we can hope that the government has decided to plow that money back into infrastructure spending, and that might just happen. Let me come to you, Gokul. I think the other big question that I have for you is that, in the union budget, the government has a chance to review taxes. Now, taxes are also, if you look at what's happening on taxes, at 21,000 rupees a month of income, you have to start paying taxes. Look at what the cost of urban living is. That's just hardly anything for a family of four living in any India city. Is there a case then to also make taxes, your tax slabs, your minimum tax exemption, inflation adjusted?
Absolutely, because if you look at it, the ordinary man is looking at a situation as you described, but he's also looking at the fact that the oil price movement has not come and benefited him. He's also looking at the service tax rate, which goes and hits his expenditure going up. He looks at the Swachh Bharat cess going up on him, and he looks at a number of other tax costs that are really building up on him. In the context of this, he does not see the rules which are meant to be contemporaneous actually moving and shifting over the period of time. So Mr. Jaitley did make an effort to reset the thresholds last time, but the question is that we are in an inflationary economy.
Mr. Jaitley also said that we don't need direct tax code at all. And I remember that direct tax code, one of the recommendation of the committee was to link the minimum tax slab and keep readjusting tax slabs according to inflation every year.
Absolutely. Now, if it's either one every year, or if you want to make it a little more stable, you want to make it every alternate year, but there has to be a roadmap.
But there's a strong case. There's a strong case.
Absolutely.
All right, Shubhata, would you agree there's a strong case to link your income tax slabs and minimum exemption to inflation?
I would 100% agree. I think because there's also the question of incentives. All of us respond to incentives, the carrot and the stick. So from a government standpoint, if they link the minimum exemption, because if the exemption goes up, exemption limits go up, they lose revenues. So it is in the government's interest to keep inflation down in this environment, to minimize the loss of revenue with the rise in exemptions. So I think incentives would be aligned. I mean, I know this is jargon speak, but I think everybody would be on the same page if there are mechanisms to try to make the government pay for if inflation rises.
Okay, fair enough. Now the other very, very curious part about our taxation system is that 90% of India's population actually falls in the tax bracket of up to 5 lakhs, right? And below. and it contributes to just 10% of taxes. Now, this is extremely lopsided. This itself, Gokul, is a very telling story that maybe, you're not really earning that much from majority of the people that you're taxing.
That's true. But I think the government keeps it for the purposes of keeping a large population within the tax net. We've already seen a situation where the number of our taxpayers is just about 3% of our population.
Right.
And I think the government recognizes that if they were to try and reduce the 10% slab anymore, they will probably have far more people falling outside the tax net.
So you believe that that's all right? I mean, just to keep the tax base wide, this is not an issue. What you need to do is just adjust it to inflation?
Absolutely. And you not only need to bring the minimum threshold when you bring into tax, but maybe the 5 lakhs where the 10% threshold finishes, that needs to move up also in every alternate year to give that space for that window to be a relevant window.
All right. Shugata, the other big question is how, and this is what Gokul just pointed out, that only 3% of India's more than 1 billion citizens actually pay taxes. For the longest time, in each of the budget speeches, we've been hearing that we have to widen the tax base, we have to widen the tax net, but somehow we've just been unable to do it. Professionals, small family-owned businesses, rich agriculturists, none of them can still be taxed. How do you fix that?
Problem, but again, the story of the incentives come in again. The GST was meant to do this, moving into a input credit based system where the tax trail, where the money trail would become much more evident. I think one of the things that we need to worry about this, but there are a lot of potential taxpayers, I think, that need to be taxed, and given the fact that we now have a huge database, the tax information network, we have big data analytics, I don't really see why a more sincere effort can't be made to increase the tax rate and give some relief to the salaried people who bear the essential burden of the tax payments in the country.
All right, fair enough. A quick short break. We'll come back to actually take a look at India versus other countries. Are we one of the highest tax-paying countries, or actually we don't benchmark very high? What's happening in Sweden, Portugal, Denmark, Belgium, US? How much do people really pay? And that big clamor or big discussion around corporate taxes being brought down to 25%. Then why do you keep personal income taxes as high as 30% plus? There are a couple of surcharges, and that also adds up. We'll be back in just a minute. You're watching Let's Talk Money. We are decoding the big business headlines for your pocket, your savings, and your spends. Thanks very much for staying with us here on Let's Talk Money. You had RBI actually raising estimates for inflation. So the big question, should the upcoming budget actually look at reducing our tax burden? How much are we taxed? Let's take a look. Sweden, Portugal, Denmark, Belgium, the tax rate is 53 to 56%. That's how much income tax people pay. In China, it's 45%. In United States, it's 39%. In India, it's 30% plus certain number of surcharges, which is education, cess, etc. And that adds up to 33.9%. Now, lowest is Brazil, Malaysia, Sri Lanka, Pakistan, 27%. There are also zero tax havens, Cayman Islands, Kuwait, Oman, Qatar, Saudi Arabia, UAE, and we all wish we could migrate there. But we can't. We love our country. We want to stay here, Gokul. So the question is, we don't look so badly off in terms of what we are paying as taxes. As citizens, we should. But when there is a clamor that you bring down corporate tax rate to 25%, does it make sense to keep your highest tax slab at 30%? Personal income tax.
For several decades around the world, the thinking was we should not allow too much of an arbitrage between the maximum peak personal tax rates and the corporate rates, because the ability for people to move their income into a corporate structure and vice versa will otherwise
and it will start happening.
That's the concern that was there. In the last decade or so, what has happened is that we have seen a lot of capital mobility. And capital has become extremely mobile. And companies have extremely mobile in moving their profits. And countries around the world have gone into competition to try and attract capital and companies into their fold.
Right.
And that has led to a situation that they're bringing down the corporate tax rate to attract investments into their own home jurisdictions. On the other hand, in the European economies, they realize that there's very little mobility for individuals to move out of their jurisdictions. So how has the shift taken place? If we look at it very interestingly, in Europe, where the tax to GDP ratio is about 16%, 17% or 18%, 8% of the 18% comes from VAT. Another 6-7% comes from personal income tax, people who live in that jurisdiction, and about 4% comes from corporate income tax.
Okay.
So we see suddenly a lever moving here where the finance ministers are believing that what is captive to them is the personal income tax, because people are going to stay where they are, and secondly, they're going to spend where they are, so therefore VAT.
Right.
So personal income tax
Value-added
and
tax.
VAT is becoming the mainstream tax which is there, and corporate income tax is not seen as
So you're saying if you do
significant.
not rationalize corporate tax, there's a fear of losing business itself. Corporates could relocate, which means a loss of jobs. Shugata, is that the reason why you think that the rates are being considered to be brought down from 30 to 25%? And of course, is the question that there will not be parity between the highest rate of income tax versus highest rate of corporate tax, and that's all right.
So a couple of points on this. One, I mean, there is a fundamental difference between corporate taxes and personal income taxes, because corporate taxes also need to factor in the risk-taking, the entrepreneurship premium, so to say. I completely agree that that in a global environment when capital flows in and out of that, and this is essentially why the OECD countries, the rich countries, have this BEPS design now in terms of profit shifting and so on. But together with this, remember that taxes is definitely an important part, but if we reduce the overall cost of doing business for enterprises, for companies, large, small, medium in the country, I think taxation, the impact of differential taxation, I think will come down. I think that needs to be the focus. Then on top of that, if there is an equitable and known structure of taxes, then the tax authorities can go after this, unlike the retrospective taxation that we tried at one point in time. So these are the issues, but overall, I do believe that we should try to minimize taxation. The other point in terms of the high tax countries, the Nordic countries, the Scandinavian countries, remember the services that they offer, the countries offer to the citizen, almost a cradle to the grave kind of structure.
Yes.
So people there don't mind paying that level of taxes, which we don't get in India.
Well, thanks very much on that note for joining us on Let's Talk Money. We are here, all of us, to do a simple job, make sense of the global events and big business headlines for how they affect us and our pockets. I'll see you same time again next week. Thanks again.